Ladies and gentlemen, welcome back. This is Christopher Aaron. By the time you see this, it will be Friday, March 27th. We are going to look at the world markets with the continuing coronavirus pandemic. We will look at gold, we will look at silver, we will look at the stock market and the commodities markets and see how these things are interrelated and what should be coming for the markets going forward. I first want to really wish you the best of health and really encourage you to foremost take care of yourself and your families in this extremely difficult time that we are all going through. Let's look at some of the latest stats here just to look at how the trends are developing with respect to the coronavirus itself. We are looking at the United States this evening. This is being recorded on Thursday night. It will be Friday morning, most likely by the time you see this. But one way or another, we're looking at the U.S. taking over as far as the most cases in the world for a country. I think most of us suspected this would happen eventually, but here we are just 2 months after this really began, and we have taken over here in the U.S. Now, when we look at deaths, though, we are still looking at Italy and Spain having the lead with the total number of fatalities that we have seen. Certainly on a percentage basis, Iran is up there as well. So some slight differences here, but this is shocking to see, especially if we do start to see an escalation in the number of deaths here in the United States over the next week. We will be passing these numbers here, I suspect, before not too long. So the big news on the financial front is that just this week, on Monday, the Federal Reserve here, the central bank, announced that they will be engaging in unlimited QE, or quantitative easing. This is just a way of saying money printing. So if you go back and you study the history of these bailouts and these money printing programs from past episodes, you know, the big one was TARP, the Troubled Asset Relief Program, going back to the financial crisis of 2008. And during that period, it was unprecedented that the Fed was going to engage in a $750 billion quantitative easing program or money printing program. And I remember that specifically. We were all appalled. We were totally, this was the end of the dollar. This was the end of the world. And, you know, here we have the Fed, after printing already what looks like over $1 trillion just in the last couple of weeks, they have now gone all the way to saying we are not even going to set a limit anymore. It's like they've totally given up on that farce that they even had a limit to begin with, and they're just flat out admitting that we are going to print money until the end of the earth, basically, is what this is saying now. So if you think about it, this is the most bullish fundamental development that one could possibly ask for as far as precious metals, right? This is it. This is what all the gold and precious metals investors have been saying was going to happen at some point, which is that they totally embark on an unlimited money printing program, and this sparks a super round of inflation that causes people to seek safety in the precious metals. Here we are. The moment has arrived. The point that I like to try to make, though, is that it's not so much what we think should happen, what you or I may think should happen, but it's what does the market actually believe? What is the market, or the sum of the people here on this planet, actually doing? Because it's very different for us to have a belief about what should happen based on unlimited QE versus what is the sum of the population actually going to do. So that's what we're going to look at as we move forward. Now, let's pull up the graph here of the Federal Reserve's total balance sheet. The other way we could say this is the total amount of money that they have ever printed. Now, remember, we were talking about those bailouts in 2008. This was, so in this, now keep this in mind for 1 second. This graph only goes back to 2003. The Federal Reserve was founded in 1913, okay? So it took 90 years, 1913 to 2008. It took almost 100 years for the Federal Reserve to get their balance sheet to slightly less than $1 trillion right here on this graph. So a little bit less than 100 years for the Federal Reserve to print $1 trillion. In the crash of 2008, the Federal Reserve doubled the amount that they had printed in the previous almost 100 years. You can see that right here. That's how much they printed almost overnight in the crash of 2008. Then we saw continued printing as they forced rates artificially low for so many years, continued printing. They tried to taper here in late 2017 into 2018, and they couldn't do it. The markets threw a temper tantrum, and what happened? This leads us to the present moment where we have what? A new all-time in the history of mankind record for the amount of money that the Federal Reserve has printed. And of course, you know I use this word printed and put this in quotes because, of course, I know they're not printing. We all know that. But this just sounds a little bit better because it's a little too long to write out that they type a bunch of digits into a computer and hit enter, and suddenly the money is created. But we know what we're talking about here. The point is, you can see this, so we're above 5 trillion right now. So, from approximately 3.8 trillion to 5.1 trillion. The Federal Reserve has printed almost $1.5 trillion here over just the last couple of months. New all-time record. So there's more money floating around in the central bank's system than there ever has been in the history of the Federal Reserve. Now, does this mean that gold is going to continue moving higher right now? Let's bring up the gold chart here for a moment. And I want to point out to you one thing. Take a look at this all-time peak for gold that was set back in 2011 when gold was above 1,900 US dollars per ounce. And look at how much money existed in the Federal Reserve balance sheet. In other words, how much money had they printed back in 2011? Just under $3 trillion. And here we are over $5 trillion right now. So over a $2 trillion increase since 2011. Now, why is gold less than it was in 2011? Well, certainly there's some nefarious activities going on in the central banks. I don't discount that possibility. But can we all acknowledge here for one moment that the markets do not behave rationally? That the markets are actually the sum of a confluence of the total psychology of the participants that are engaged in the markets. And for example, we might have a better analogy of what the markets are actually like by taking a moment to read this little cartoon here. Shut up, you moron. Do as you've been told. It's for your own good. Right? They say to the one sheep who's questioning the herd psychology of running off the cliff. Well, can we see here that markets in their own way behave irrationally for extremely long periods of time despite the fundamentals? So this is why I do not place the foremost emphasis on a study of fundamentals, because even look at a period, for example, from 2011 down to 2015, right? Look at my mouse here. When gold fell from 1,900 down to just above 1,000, almost a 45% decline in the price of gold. What was happening to the amount of money printed? It was steadily increasing. I know that's covered up right there by the arrow, but look, it was steadily increasing the entire time, right? So markets can move opposite to the fundamentals for longer than investors can stay solvent. That's the key thing to remember, which is why I believe we should study what the markets are actually doing foremost, not what we think they should be doing. And when we look, so this is the chart from last week that I brought up about the total market since the peak of the stock market here back in 1 month ago. And remember, I had said in deflation, everything is moving together, right? So going back to last week, gold was lower, commodities were lower, gold miners were lower, the US stock market was lower, silver and oil were lower, right? Let's fast forward to the last 4 days since the Fed announced this money printing program. Keep in mind, so just remember one thing here. Oil is a bit of an outlier because we have all the tensions going on with Russia and Saudi Arabia right now. But look at the other worst, 4 performers here out of these total assets. Silver, the U.S. stock market, gold miners, and commodities basically moving exactly the same, right? And what were the 2 things that were holding up the best? U.S. bonds and the U.S. dollar, right? The fiat assets and all the industrial types of things falling together. Let's fast forward to the last 3 days and notice what are the best performing assets now? Silver, the gold miners, and the general U.S. stock market actually performing right up there, and notice the correlation here between the blue line and the red line. The general stock market and the gold miners. I mean, these things are moving almost lockstep. Yes, a few points difference here at times and then giving back a few points, but look at where we finished. Look at how silver here is moving with the stock market, right? 1-to-1, as far as the direction, and then fading here a little bit today. Notice how gold recovered, gold is positive, and then notice how U.S. bonds and the U.S. dollar, the only 2 things that were higher over the last month, are now the only 2 things which are lower. So this is deflation like we had seen in the previous month versus inflation right now over just the last few days. And the question is this over? Is the deflation over and they finally printed enough money to cause more inflation? Or are they fighting a futile fight and they have not yet got this thing under control? Or can we imagine for the first time, perhaps the thing that no one suspects could happen actually happens, which is that the Federal Reserve actually loses control of the markets at this time and actually does not have the capacity to correct what is about to happen or to support what is about to happen. Can we imagine that happens for the first time? And everyone is so caught in with this right now, thinking that the Fed has everything under control, right? What if this is the one time that they don't? We should consider this possibility. But where are we right now? Remember, we're placing an extreme amount of importance on the structure, the rising structure of the U.S. stock market here, going back to the last major low back in the crash of 2008, 2009. We were looking at these hits along the trend line, and I said, we need to see 2 weekly closes below this long-term trend line in order to solidify a break of this trend, of the structure, the rising structure of the stock market here. Where are we right now? What has happened? They are trying to get this thing back above after only 1 weekly close. They are trying their hardest. We are right there. We are right above it right now. There is 1 day left on this thing tomorrow for the week. And this is going to have an absolutely, if you looked at that correlation between the stock market and silver, for example, the stock market and the gold miners, this is going to have an absolutely monumental impact on every world asset class for the next 6 to 18 months if we fail or hold right here. And there's really, based on how quick this has been happening, this took only 4 weeks to come down. We've had a 1 week recovery. I think we are going to have a very good answer to this as to how the sum of the world's assets are going to be behaving over the next year to 2 years, and then the implications for that into the next decade. we should have an answer to this within the next 2 to 3 weeks. This has given us one brief weekly close, and now we're recovering, so we need to give this a little bit more time to stabilize or not. And then we are going to have a huge answer to which of these two scenarios are going to play out. This is what we've been covering extensively in the premium subscription service, Precious Metals Intelligence. And we are expanding into other markets. As you know, we're covering the stock market a whole lot more. We are starting to analyze the energy market to get ready for positions in that within the next year or so. And the scenario that we're looking at here is scenario A. Was this crash that we just saw similar to the crash of 1987? In other words, a mini panic, a 1-month mini panic, and then do stocks begin to recover already? Remember, it seems irrational, it seems illogical that perhaps the stocks could recover because this virus is clearly not over yet. But remember that relationship between, for example, money printing and gold. Markets do not have to behave rationally for any period of time. This is a psychology phenomenon that we are observing here. So do stocks begin to recover? This is scenario A. Or does this crash continue? Do we get those 2 weekly closes below that structural trend line and then further deterioration in a crash of 1929 style of recession or depression, in which case all global assets decline for the next 6 to 18 months? And the big question is, if we get this scenario A, what happens to gold if stocks actually recover? What happens to silver? And furthermore, if we get the scenario B, what happens to the stock market? How far does this fall? And when does gold start to distance itself from the stock market? These are all the questions that you have to ask based on which scenario plays out here over just the next couple of weeks. And these are the types of things that we are answering and studying week in and week out in Precious Metals Intelligence. There will be a video just like this going out on Monday, which will be approximately an hour in length. I will be answering a lot of members' questions. We have a lot of questions about premiums. Why are premiums so high? Are there better ways to buy gold and silver than to pay those sky-high premiums? There are. We are talking about the inflation versus deflation debate. We are taking a look at how this is impacting all the markets. Could they, for example, keep the dollar propped up and the bond market propped up the way they did in Japan following the crash of the Japanese stock market in 1990? Could they do the same thing here in the United States as they did in Japan? We're looking at all these types of things, as well as what's happening with gold, with silver, with the US dollar, and the stock market, as well as any positions, the exact investments here that we are buying and selling. You will get all of that to you in Precious Metals Intelligence. If you would like to speak one-on-one with myself about any of this or about your unique situation in the precious metals, know that I work with individuals on a one-on-one basis. I take no fees from any of the gold miners, from any of the dealerships, from any of the stocks that we do invest in. This is simply my best take on the markets applied to your situation. Make sure to hit that big red subscribe button so you will stay updated. And thank you to all the supporters of these videos on Patreon. Make sure to take care of yourself. This is the absolute most important thing. None of this matters at all if you yourself do not make it through this. So I really am saying that to you right now. Focus on your health. Focus on what you need to do for yourself and for your family. And make wise decisions regarding your finances, regarding these markets. This is, I have studied these markets on a daily basis, going back to 2004, 2005, especially in the crash of 2008. And this is the most volatile period that I have ever seen. This takes the cake out of them all. Out of all the crashes that I've seen thus far, this is the most extreme, and we have plenty of data to support that. So I want to really encourage you to think about that. You know, we're living through something really unprecedented here. And there is light at the end of the tunnel. I think we are going to be okay. I think civilization is going to continue. There may be some new restrictions on some of our liberties. We will have to address some of those points in the future. I will be doing some more live videos with myself and my companion out in the woods, and we will address some of the bigger picture questions here in this time period that we're looking at. I think all this is really important, but please take care of yourself, and for those who want to go even deeper into the intelligence, know that this service is available for you. Thank you.